The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Another busy day for Squawk Box Europe. I'm Steve Sedgwick with Karen Cho and Juliana Tattelbaum, and these are your headlines. UBS first quarter net profit coming in at a better than expected $1.7 billion as wealth management income surges.
If you look at the last 10 days or so, I think there is a little bit of fatigue coming in. I think that investors are now waiting in a wait-and-see mode. Markets have settled down to levels that now people are waiting for significant news.
And of course, we're going to hear plenty more from the CEO Sergio Ermotti. That's coming up next.
Wall Street eyes the worst start to an administration since Gerald Ford as tariff chaos hits U.S. equities. But Commerce Secretary Howard Lutnick teases the administration's first trade deal.
Here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval, which I expect shortly.
And DHL confirms its full-year outlook despite flagging growing uncertainty brought on by President Trump's turbulent trade policies.
The reshifting of manufacturing leads to more complex supply chains, and this is why we left the guidance unchanged, because it's unclear yet for us whether the negatives or the positives are going to outweigh.
Okay, as we mentioned in the headlines, UBS reported a better than expected first quarter net profit of $1.7 billion. The Swiss lender says it's seen continued strength in its global wealth management unit, as well as investment banking, where global market revenues surged. They love a bit of volatility, don't they, the banks? 32% year on year. Carolyn spoke to CEO Sergio Ermotti.
We have a very solid results. I was very pleased to see once again the value of our diversified global business model, the fact that we have been able to continue to deliver on our integration plans. We stayed very close to clients, in navigating a very challenging environment, and seeing that also our ability to continue to generate capital with a strong balance sheet and liquidity position. So I think overall, also it's good to see that wealth management, asset management, and the investment bank both delivered double-digit pre-tax profit margin increases. So I think it's a very strong set of numbers.
It was a very volatile quarter for markets, and let's talk about the makeup of the investment bank and the sort of trends that you saw within. Talk to us about global markets, which did tremendously well, and how much of a lag you're seeing when it comes to global banking and advisory.
Well, I think that, first of all, of course, the first quarter has always a little bit of typical tailwind seasonality factors, but it's fair to say that when you look at from the second, third week of January, a little bit the tailwind fade away, and there was uncertainty and volatility stepped in, and our ability to serve clients in this very challenging environment was confirmed. So I think that you look across equities, derivatives, FX, and across all major asset classes where we want to be very competitive, we perform very, very strongly. We also see a significant gain in market share. In banking, the situation is, I'm also very pleased because despite the very challenging environment and fee pools being under pressure in ECM and M&A, we had significant outperformance compared to our peers. So it shows that the investments we made in the last 24 months are paying off.
There you go, Sergio Ermotti speaking to our very own Carolyn Roth. Lovely to see you both. Good morning.
Good morning.
Day 3, we're kind of almost building up a bit of muscle memory in the news studio. We've had a lot of comment, by the way, from the viewers. Thank you for that comment. I know some of you find it strange, the new setup. Others of you love it as well, so great to hear. Look, UBS, I'm going to say something which is probably a little bit, I don't know if it's left field or not. I don't think, unlike most companies in the world, that Trump and tariffs are the big issue here for UBS. I think the problem is Switzerland. And if you look at the share, I think it's actually nothing to do with Trump. If you look at the problems that UBS is having after, quote, the deal of a century and picking up all those Credit Suisse assets, they're coming from their own government. It's coming from the leadership in Switzerland, which is looking at slamming on enormous extra capital on this bank because they are terrified at the size of this behemoth. Do you say behemoth or do you say
behemoth?
Behemoth, behemoth,
yeah.
potato. I know, but I've noticed your socials on that. You've been playing on that. It's very good. But their problem is, and the chairman and the CEO are wringing their hands saying, we rescued Credit Suisse, we rescued Swiss banking, and now you want to slap on all this extra capital requirement. That's where I think the big problem for them is.
To be fair, we did highlight that could be an issue if you create a big beast, that you want to be able to tame the beast if necessary, so it's not surprising. To me, what jumps out from the numbers, and this is a greater perspective perhaps on banking and where we stand right now, thanks to the volatility around Trump. Wealth management, 12 months ago, wealth management was a clear direction for a lot of these banks. If you look at the quarter-by-quarter comparisons now on global wealth management, those revenues decreased by $159 million US dollars. Same time a year ago, what else was firing on all cylinders? Net interest income, because of course we were talking about a slight glide path lower for interest rates, but it was still from a very high level. So those two huge drivers for the bank, now not as positive as they were, but for me what jumps out, the real driver, and this was the area where over time there's been this tortured debate, how much investment banking do you want on the books? It is too volatile. Do we want to expose ourselves to that part of the business where we have those much more steady global wealth management streams? If you look at the numbers today, thanks to the enormous volatility we've seen on equity markets, that part of the business, equity derivatives and foreign exchange revenues were increasing here, and that was a real driver for the bank. And again, for other big banks stateside, other big banks across Europe, this is quite pressing now to see where the growth drivers are going to come from.
Absolutely. When you look at the trading activity, I thought it was really interesting to hear the color around how trading activity has evolved since April 2nd. And in the conversation with Caro, Sergio Ermotti said that the first couple of weeks of April, definitely extremely volatile. Peak volumes in the first couple of weeks exceeded 30% by 30% COVID time. So they saw an extreme level of volatility. But what's interesting to me is that now, he says, I think that investors are now in wait and see mode. Markets have settled down to levels that now people are waiting for significant news, and he expects spikes of volatility to come back. So we are seeing some relief in the market when you look at how markets have been trading recently. But Ermotti says he doesn't think that's going to remain the case for long.
The shares trade at a premium to a lot of their peers in the sector, but they've lost a lot of that premium over the last couple of months again as well. And just looking at some of the trading, it is really interesting. They kind of plateaued at, actually, here we go. They plateaued there, about 2-3 months ago, then fell dramatically. And again, I'm going to stick by my point here. I think this is about capital rules in Switzerland. I don't think it's about Trump, because you're absolutely right. They have been making hay on the IB trading, on the wealth management, but the deal making, again, that's where it suffered.
What I was thinking the other day, is there now a moment for Swiss banking again? Because don't forget, it lost its mojo, it lost its USP after the Credit Suisse debacle. And, tighter rules from American lawmakers over the years as to where you can park your money and what's the reporting standard you have back to the United States and whether you really skirt around that jurisdiction. I think it really had some issues. Now with this race to safe havens and diversification of portfolios, money has been racing into Switzerland, or at least into the Swiss franc. I do wonder whether there is an ability for UBS to capitalize on that diversification and that safe haven status that global investors are now seeking. So that would be a really interesting feature from the earnings for me today.
I think absolutely. As part of this discussion around the dollar losing its dominance, investors shunning U.S. assets,
But they're not, are they? I mean, the debate is wrong, isn't it? No one is shunning US assets at the moment. There is a concern that over a medium period of time, the dollar, US bond markets and US equities will become less favourable. But I think we need to really put a caveat on this one. The world is not shunning US assets. The evidence is that trillions of dollars of international money is still happy to be parked in the US.
There's not an alternative. I mean, dollar is still king. You can't shun it completely, but certainly we are seeing investors, wealthy individuals look to diversify portfolios, and they're turning to the Swiss franc and they're turning to assets elsewhere, which is could be a significant driver of UBS's wealth business moving forward.
Move on to another one of the very important, systemically important banks in Europe. Year to date, up 11%. I'm talking about Barclays. They have dramatically rallied off their lows from 241 pence per share to last night's close of 298. We've all got our favourite numbers in this one. I can almost guess what some of Karen's favourite numbers are, but I'm going to go through the headline figures. First quarter 2025, £7.7 billion of income, profit before tax, 2.7 billion. Cost income ratio, 57%. That's those highly paid bankers, and a lot of them aren't doing the deals that they would have liked to been doing in the IB area. But ROTE, I think this one looks really good, actually. The return on tangible equity, 14%. Let's get to the chief executive. I'm delighted to say CS Venkatakrishnan, the Group Chief Executive of Barclays, joins us now. Venkat, lovely to see you, as ever, sir. Thank you very much indeed for joining us. I've pulled out the ROTE. Why don't you pull out what you think are the most important numbers for us, sir?
Well, thank you. It has actually been a very strong quarter, as you have said. Our profits are, our income top line is up 11%, £7.7 billion. Our profits are up 19% to the £2.7 billion you quoted profits before tax. And if you look at what comes down to our shareholders, the earnings per share, that's actually up 26%. And our book value continues to accrete at 372 pence per share. So all around, very good, very strong in investment banking, in markets, especially in fixed income and in equities. And our UK business continues to do well. We've offered an upgrade on our NII in the UK to greater than £7.5 billion and an upgrade on overall NII for the bank. So it's been a very strong quarter.
I know my colleagues are going to ask you loads of international questions, so why don't I just focus in on this UK market? HSBC pulling out of Europe to a certain degree in some of its investment banking activities. Santander, all kinds of questions about what the group is going to do in the UK. You and other banks have had blow after blow on the rulings on auto loans as well. Just how tough is the UK at the moment?
The UK is a very well-regulated, very strong banking market. You've got to be big enough and you've got to be good enough to play in it. We've been here for 330 years. We've said in our last strategy day about 15 months ago that we were going to increase risk-weighted assets by about £30 billion to the UK through 24 to 26. Today, slightly less than the midpoint of that journey, we're at 14 billion out of the 30 billion. So we're making good progress. We are deeply committed to the UK in every way, shape or form. This is our home. London is a great financial centre, and people will value London as a financial centre more and more day by day.
Venkat, it's Karen jumping in. Good morning to you. I want to come back to some of the big cross currents we're seeing on the macro side. What are you anticipating in terms of the fallout here from all of the uncertainty around tariffs, whether that is people holding back on some of the loans, whether it's ramped up activity that you're seeing in equities and FX? What are the fallouts that you're expecting from here?
Fairly high market volatility. It's calmer now, but I imagine it will continue to go up and down. And then when you go beyond that, as you've seen in our results, that market volatility helps us to help clients manage their risk. We can do so in a profitable way that helps them as well, and it helps markets income as long as you manage your risk well. I think going forward, the longer this goes on, the greater economic uncertainty there is, which is putting companies, as you say, off from making decisions. Individuals also take time to make decisions, and you could have a risk of a slowdown in economic activity. Now, we have a good bank, well diversified geographically, by product, by region. You can see the mix showing itself and the strength of that diversification in our first quarter results. But even though we have a good starting point and you don't really see it in economic numbers, we've got to be prepared, and Barclays is prepared.
When you're talking about preparation, are you talking about preparing for a recession in the United States?
Well, we are prepared for a range of eventualities, and we built our plan around that range of eventualities. Some of which is economic weakness in our major markets, the UK and the US, and some of which is market volatility and slowdown in various forms of activity. But as you've seen, even in our first quarter results, volatility was up in the first quarter, not as much as it was in the second quarter, has been so far in the second quarter. Our markets business did reasonably well in the first quarter, and our deposit growth in the UK has continued, and therefore we've upgraded our NII. So we have cross trends in the business that help protect us.
Venkat, sometimes in banking there are moments in time that has a big ramification for the direction that a lot of banks take. And I do wonder whether there is some impact here from what we're seeing, that huge investment banking change for a lot of banks, the volatility that's really driving the performance. Do you think now we're going to see a reset of expectations of investment banking versus wealth management, for instance, where a lot of the banks were focusing on the last number of years?
Well, look, I think it's important to have a diversified set of businesses, because each one will have its moment in the sun, and each one will go through a period of relative slowness. And that's what we have. And I do think that investment banking, or particularly the trading part of investment banks, has been having its moment in the sun in the last few months. But, you know, calm will eventually come to the market. People will have greater clarity on what the new economic order is going to be, and then I would expect deal activity to pick up.
Venkat, good morning. Juliana here. Let me take you back to the UK. We've been witnessing a drop in consumer sentiment here in the UK. Spending, though, seems to be holding up. What is your take on the state of the UK consumer, and more importantly, the outlook based on what your customers are doing?
I think the UK consumer has been cautious over many years. Actually, you started in COVID. And what we've seen through our exposure and our dealing with our clients, and, you know, we offer all the services across the UK to individuals, small businesses, large businesses. What you see is careful stewardship of their finances. They're watchful of their borrowing. Obviously, housing is a big part of consumer spending, and a shift in the way in which they do their spending. You know, slightly less non-discretionary, slightly more careful on discretionary. So I think they're preparing themselves. Having said that, unemployment is still relatively low in the UK, so there are jobs, as we've seen. Growth could be a little better, and we all are supporting the government in its ways to make growth better. But so far, so good in the UK.
In January, you spoke to our colleagues in Davos, and you sounded pretty upbeat around the outlook for the Trump administration, in particular around deregulation and the M&A landscape. Clearly, the world has changed since the end of January, when President Trump actually came into power, and I think many are now questioning whether we are going to see that uplift that many had been hoping for. How are you feeling now, 100 days into the Trump administration?
Yeah. Well, I think what we expected from the administration in terms of deregulation, in terms of their approach to M&A activity, has not changed. They're still supportive of that kind of activity. What has changed, and this was well telegraphed by the president during his election, is the tariffs and the impact of the tariffs and how people are trying to understand them. So I think once you get past that, and people understand what the economic order is going to be, how companies should be valued, what are good business arrangements for companies domestically and internationally, and you take that along with the deregulatory impetus from the administration, then you're likely to see a pickup in deal activity, but we have to wait for that clarity to come.
Venkat, there seems to be a very high probability that when I go to Threadneedle Street next week, I will be reporting on a rate cut in the United Kingdom. I asked the next question with your net interest margin in mind, which is looking pretty solid at the moment, 3.55% compared with a year ago of 3.09% as well. So actually increasing is no mean feat. If we get 25 basis points cut next week, will Barclays pass on the full 25 basis points to your mortgage customers?
Well, look, we are operating in a market where there are other large banks, and we will obviously adjust our pricing to be consistent with what's going on in the market and to serve our customers well. On the other hand, what I would say, coming back to our net interest income and the upgrade on our net interest income, a part of that is what we call a structural hedge, which is the way in which we use interest rate swaps to protect ourselves actually from fluctuations in interest rates. And it is that which provides a very, very strong ballast to our net interest income and will continue to support it even through fluctuations in interest rates.
I hear what you're saying, Venkat, and it's a great answer, but it wasn't the answer I was looking for. Yes or no, sir, will you pass on the full 25 basis points to your customers, to beleaguered British consumers?
We believe in British consumers. We've been very strong supporters of the UK mortgage market and are big players in it, and all forms of personal credit.
Venkat, I want to just come back to you quickly on the impairment charges too, as we talk about the interest rate environment. I can see they've stepped up in the quarter. Is this the worst of it, or do you think we need to see more provisioning around some of those credit impairments from here?
As I've said to you, we don't see weakness yet in the economic numbers. What we've done on impairment is just take a provisioning for the U.S. consumer business, which we have, our credit card business, in anticipation of some of what we could see. But we've got to see the numbers come through, and as we see the numbers come through quarter upon quarter, we'll make adjustments one way or the other.
Venkat, thank you so much for joining us so early this morning in the Back of Numbers. We do appreciate your time and the clarity around the macro and what the business is doing right now. Group Chief Executive, Barclays. Let's get to some of the other big banks reporting as Credit Agricole profit dips after being hit by an exceptional tax impact. But record revenues means it's not all bad for the French lender. Meanwhile, CaixaBank benefited from a reduced impact from the banking tax, posting a 46% rise in net profit in the first quarter. Spanish banking giant Santander reported a near 20% rise in first quarter net profit to a record 3.4 billion euros. The lender benefiting from strength at its Spanish retail banking business. We'll be hearing from the CFO, Jose Garcia Cantera, later this hour.
Coming up on the show, Stellantis earnings have just crossed the wires. Charlotte will join us to break them down after the break. Plus, Santander gets a boost from its retail business in the first quarter, booking record net income. We'll discuss the numbers with the CEO later this hour. And net profit at CaixaBank rises nearly 50% in the first quarter. CEO Gonzalo Gortarazar joins us in around 45 minutes' time.
Ladies and gentlemen, I'm going to ask you to do some maths, and I know you're a financial audience, so let's see if you can do this. What is 200 minus 1? What? Juliana knows. Karen, it's 199. That's the difference between... Well done, you all got it right.
We don't need the calculator.
You nailed it, guys. That's the difference between the number of trade deals that Mr. Trump said would be done in his time interview and the number of trade deals we understand that Howard Lutnick's talking about. I'll fill in some gaps. US Commerce Secretary Howard Lutnick tells CNBC that the Trump administration has reached its first trade deal as countries seek to avoid sweeping tariffs at the end of the 90-day pause, but said it's not yet finalised. Oh, so it's kind of not a deal yet. Anyway, okay, we'll call it a deal. That's one. In the bag. Done. President Trump and Treasury Secretary Scott Bessent both hailed progress in talks with India, saying a deal is very close. That's what the Treasury Secretary said. Now, Lutnick, he didn't name the country he said an agreement with had been reached, though, but did say he's not dealing directly with China. Interesting. The Commerce Secretary also told our US colleagues he expects the deal to be approved shortly.
Treasury Secretary Bessent is focused on China. That's his portfolio. He's got to get something done with China. And my portfolio is the rest of the world's trade deals. So they are
That's
coming.
a big portfolio.
Oh, it's the greatest thing because we have every country in the world, just like Donald Trump has said, who wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval, which I expect shortly.
Yesterday saw further gains for Wall Street. Sentiment seemed to be boosted by hopes, anticipation of measures from the Trump administration to ease the burden of tariffs on the auto industry. Later in the day, we did get measures announced that effectively give automakers more flexibility, more time to bring the more manufacturing to U.S. shores. So they're going to get a couple of years to boost the percentage of domestic components in vehicles. Also, the Trump administration saying that they're not going to stack tariffs on top of each other when it comes to the auto sector. So that seemed to provide some support for markets. And overall, we saw all three of the majors stateside move higher. The Dow Jones added about 75 basis points. That was the sixth positive session in a row. S&P and the Nasdaq also moved higher. In terms of Asian trade overnight, here's the picture for Asian markets. Nikkei 225 back trading in the latest session, up 0.6%. The Hang Seng in Hong Kong also moving higher, but a bit of red on the board for the Shanghai Composite deposit and the Kospi over in Korea. As for European equities, of course, we've got earnings in focus here, so a lot for investors to wade through this morning, and we're looking at positive signals across the board, so following that strong session on Wall Street. U.S. futures at this early hour, they are pointing to a little bit of a pullback, but not much, so fairly muted start to trade as investors there brace for tech earnings to come into focus. A lot to play for stateside, so all three of the majors pointing to a slightly weaker start at this stage.
Thank you, Juliana. Right, in the meantime, the US President Donald Trump signed a pair of executive orders to relax. Is this a U-turn? I think we can call it a bit of a U-turn. He signed a pair of executive orders to relax some of his tariffs on cars and auto parts. Car makers can apply for small credits based on the value of vehicles assembled in the United States, whilst duties on foreign parts will also now be cut. The administration says the move should allow car makers time to move supply chains to the United States. Speaking at a rally in Michigan, Trump said he was offering car makers some flexibility.
I'm giving them a little bit of a break, right? They took in parts from all over the world. I don't want that. I want them to make their parts here. But I gave them a little bit of time. It's 15% and then 10% of the parts, so it's not so bad. Somebody would say, oh, well, that's a change in parts. It's not. It's called a little flexibility. The guys were crying. They love it. Everything's good. But just in case we can't get everything in time, we gave them a little bit. So it's 15% of the parts, and then it's 10% of the parts. We give them a little time before we slaughter them if they don't do this. Right? They're going to make so much money. They're going to have so many jobs.
And Volkswagen warned it expects full-year operating profit at the lower end of its range, as well as net cash flow and liquidity. Q1 earnings plunged 40%, with the car maker saying EV sales weighed on margins. Mercedes-Benz has warned that tariffs could impact full-year earnings, with trade tensions forcing the automaker to scrap its outlook. Q1 earnings plunged 41% to 2.3 billion euros, with the profit margin slipping to 7.3% from 9% a year ago. Stellantis has declined to offer full-year guidance, citing US tariff uncertainty. The automaker reported net revenues down 14% on the year, broadly in line with expectations. Charlotte is with us for more. Charlotte, there were competing lines here. I couldn't work out which was the top line around the lack of guidance or the fact that the company is now moving forward the process to find a CEO. Typically, you'd think that would be the number one when it comes to direction, but the macro is so dicey for these automakers, it's still all dominant.
Yeah, the uncertainty that has unleashed on all these automakers. Similar sound here again from Stellantis, suspending their guidance. I previously expected a moderate recovery this year. The guidance I had given in February was a positive net revenue growth and positive industrial free cash flow. Well, they're suspending all that, and they say it is because of the uncertainty around the tariffs. Now, the company is saying this morning that they are engaging extensively with relevant governments to facilitate informed implementation and evolution of policies. But in the meantime, management is taking action to adjust production plans and identify opportunities for improved sourcing. So they say that actually they reduced shipments in the US of imported vehicles, that they suspended altogether those imports of European vehicles in the US in April. So they're working with their suppliers, trying to understand the impact of those tariffs. That's why Q1 net revenue was down 14% to 35.8 billion euros. The impact was mainly because of the vacants on production in North America, because again of those tariffs. They had two plants in Canada and Mexico where they suspended production, a supporting plant in America as well, where they had some temporary layoff some staff as well. So they're working on all this. And it's interesting because Stellantis is one of these companies that announced some heavy investments in the US. Mr. Elkann was in the US announcing a €5 billion investment before the tariffs were announced, hoping that this will help soothe the Trump administration to not announce those tariffs, with tariffs coming into play. And uncertainty on the context where we know they're competing with Chinese EVs in Europe, but they had those problems after the pandemic. They put a lot of vehicles in the US because there was more demand than supply. That hit them back there. Again, last year they had some troubles in the US. They lost some market share because their cars were too expensive and were just left in the stores. So that's why we saw the CEO being ousted. Now they said the look for the new CEO is well underway and will be announced before the end of June. Bit of a headache there for the new boss of Stellantis, whoever comes on board, because it's a complicated picture.